Hey traders, welcome back to another trades review. So let's have a look at this trader's performance. I had a look at everything. It seems okay, but it's a little bit too slow. He took, I think this is a 60k prop firms account. Should be phase 1 or phase 2, I'm not sure. He's been taking this since January and all the way until right now March, mid of March. Everything's still looking pretty stagnant. But anyway, sometimes we can just experience periods of slow market. It doesn't necessarily mean, oh, this trader is not really having 5-10% profit, he's not good. No, there's no such thing. There are times where, including myself, since February all the way until now, so January until early Feb, I have my 7 figures month. All the way from mid of February right until now, my entire account is still in a small drawdown, as in I lost about 2% plus. Not really 2% plus, I mean 2R plus, as I no longer risk percentage amount. I risk an amount that I personally can afford to risk. Right now, on average, I risk about 30 to 50k a trade. Unless the setup is really good, I can risk 100k, but rarely, very rarely. So let's go into the detail. We'll start from 14th of January because there's missing data here. Risk reward wise, if we had a scan, it looks very healthy. See, the winner is 2.4k, but not enough winner. A lot of them are small one. You see, 1R, he risked about 0.5% per trade. Sometimes one, I'm really not sure. You see, sometimes he risked $300. Sometimes he risked a full 600. Not sure what's the thought process, but don't try to have your risk amount don't allow your risk amount to have such a large gap, as in don't sometimes risk 0.5%, sometimes risk 1%. I talked about this in one of our previous one of the most recent trades review. I said that if you today, let's say you go into a drawdown, a common thing is we start reducing our risk to 0.5%, and logically speaking, the moment when you do that, you actually acknowledge the fact that you're emotionally being affected. That's why you want to size down, but don't size so significantly down that you're just half the size. So let's say you are down 8% and then you decide to reduce your risk to half because you say, I have 2% remaining, my final 2 bullets, I want to play safe. But what if it turns out that this trade is a 10R winner? You're supposed to be making 10%, but because you reduce your risk to half, you probably make only 5% instead of 10%. So if you do that in the long run, obviously you will see a huge issue there. That means you might accidentally become unprofitable having a profitable system. So don't allow yourself to be the factor that turns a profitable system into an unprofitable system. So let's have a look at this one. This trade, I actually had a look. There's a big issue here because you see, this trader actually called this a bear flag, which is not true. If you all remember what is a flag formation, there are 2 types of flag: bull flag, bear flag, obviously. So bull flag, bear flag. So bull flag, the variation goes like this. First is the typical textbook flag. We have the sort of slanting lower. Second one is a horizontal consolidation kind of a flag. It goes like this. And sometimes we might see a flag doing a fake out or doing a TPF at the bottom. Let me show you something like this. So sideways, sort of a fake out, TPF at the bottom. This is bull flag. And if you look at this one, this is bull flag, right? This is not a bear flag. But anyway, would I be taking this bull flag long setup? I won't, because we are just right below the resistance, and obviously we are not pushing fresh high, so it doesn't really take off our flag criteria. So now we go to bear flag. So bear flag goes like this. first variation, second variation, and our third variation. It's sort of a TPF or a fake out kind of flag. So these are 3 of the bear flag variations. So let me draw it properly. So if I were to compare this, as this trader, he say he's trading a bear flag, is it true? Bear flag can only have a upwards kind of consolidation, or sideways, or sort of a mini fake out at the top. You cannot say it's a bear flag when it goes like this. Let's say if it goes like this, this is no longer a bear flag as well. So if you look at this one, the angle is completely wrong. But anyway, we are not here to judge, because again, this trader was just started to learn. So everyone have their learning phase, right? So yeah, anyway, it's just incorrect. So I'll just flag this as a wrong setup. So yep, skip, nothing. This is a rollover trade. Yep, correct. It actually went quite well at the beginning, but then it turned all the way back. And one thing is, when you're trying to do your journal, just capture the next day on your post trade. That means right after you get stopped out, don't have to capture a chart, because it's meaningless. What we need to do is to actually pinpoint and identify what actually happened after you close the trade. Few hours later, 1 days later, 1 week later. We just want to know, after I get stopped out, does it go all the way up against me, or does it do sort of a fake out and then it dropped all the way back? That's exactly something that I want to know, because very often we get stopped out, but price eventually still go back into our favor. So this is something that you have to ensure you just capture your screenshot a day or 2 days after you get stopped out. In that way, you have a very clear picture of, oh, actually I get stopped out, but the next day price dropped back into my favor. So it was actually a timing error, it's not the setup error. Okay, move on. Yep, a BNR, yeah, a little bit ugly because of the gap there. But what's the outcome of this trade? It was a 1 hour loss. Yep, move on. This is, yep, clean BNR. Yeah, price eventually dropped all the way back. And when you have this kind of loss where price stop you out and then it still drop all the way back after, so what does it tells you? Your timing. So first thing is your timing. Second thing is you could have looked for a re-entry. You could have looked for a re-entry. You shouldn't just walk away. You should have stay focused. And that is something that I always teach as well. If you all look at the way I trade the market, we have a very rigid re-entry system, right? Or so-called the power of 2 attempts. That means if, let's say today I take let's assume I want to buy something. I want to buy a retest, a pullback. So we have a resistance, broke above the resistance, come back, and we identify this is a break and retest, a really simple pullback kind of setup. That's why we take a long here. Okay, so right after we take a long here, let's assume that we get stopped out. Okay, price chopped, and it stopped us out. And after you get stopped out, a very common mistake is traders just walk away. On another side, they just have the FOMO to flip to another pass and start looking for another entry. And that is something that you must absolutely avoid, because as a trader, we're not here seeking for perfection. There are times where our entry is just not optimal. The timing is off. It doesn't mean the setup is wrong. Sometimes it's just that, okay, I get stopped out right now because I don't think at this point of time the setup is still valid. But it doesn't mean the next day it wouldn't prove you right. Maybe after it gets stopped out, on the next day, price go back above the high and give you another entry here. And when you go back to this one, it's the exact same thing. You get stopped out here, you just walked away. But you fail to recognize that on the next day, price actually come back below the zone here, giving you a second re-entry. If let's say you short it again here, you re-enter another sell, and if you get stopped out, then it's absolute no more entry. Okay, but this trade could have been done better if you stay focused, if you don't flip pair, and if you have a proper re-entry model. Okay, so there are, like I always say, one problem leads to multiple solutions. One mistake also leads to multiple possible improvements as well. Don't just look at your loss in a way that I get stopped out is a bad trade. No, most of the time we get stopped out, we need to find out what's the exact problem. So why did I get stopped out? This is a very, very important thing that you have to question yourself. Don't just get stopped out, walk away. Then ultimately you're doing journal for nothing. The whole thing about keeping a consistent journaling routine is to ensure that every single day you actually go back, not every single day, at least every single week you review them, you really understand the thought process of each of your trade, and you really look to refine your system from a very logical, very objective standpoint. And that's the whole thing about journaling. If you journal for the sake of, oh, Neo tell me to journal, because this is what Neo does, that turns him into a profitable trader, then you are just not doing it for the sake of improvement. You are doing it for the sake of what? Neo tells me to do it. That's why I do it. Then what's the meaning of journaling? Okay, so let's move on to this one. You see, another issue here, on some trade, you capture everything. On this trade, there's no post trades chart. It's not consistent enough. So it was a loss. This one, this is very good explanation. Breakout, hold above the EMAs. Yep. Okay. Take a long entry. And yep, then what happened? So he closed it early because he identified that it's not exactly a good setup, it's a little bit too slow. But what happened afterwards? What exactly happened afterwards? Because there's multiple scenarios. Maybe you get stopped out. Maybe it stagnates. Maybe it reverses back into your favor. We need to know what exactly happened afterwards so that we can improve. Okay? Very good one. So this is potentially the best. Yeah, so you can actually see the R multiple is quite scary on this one. I'm not sure how much you risk, but you possibly risk $600, which is 1%. That's why you see it's 2.4k, exactly 4% gain. So this one, very beautiful. Yep, you see not consistent as well. You see on some he write a lot of explanation. On this one there's absolutely no definition here, there's no description, nothing. But anyway, it's a very clean sort of uptrend pullback entry. This kind of setup is the easiest to trade. This one, correct, I took the exact same loss as well in late February. Took a 50k loss on this one. All of you also know, as we posted inside our setups channel. This one is a beautiful trade, but you missed out the entry. No entry trigger. Okay, get it? He know exactly what he's looking for. This one, yep. So what happened afterwards? Yeah, not sure what happened. Are you still holding the trade? This one, pull back into, yep. So what happened? What happened afterwards? So these are also things that I'll question. So anyway, performance-wise, could have been improved, especially on staying focused, having a better re-entry system, and most importantly, keeping a journal very consistent. So every single journal has to be pre-trade thought process, the patterns you're looking to trade / the strategy, your trade management on this specific trade. Is it a static TP? Is it a early BE? Is it a early exit? Is it a trail stops? Is it an open target setup? You have to write them down very clearly so that it really assists you to stay consistent throughout your entire journaling process. because to me, nothing's more scary than sometimes you know what's the prompt, sometimes you don't. Sometimes you write a lot of descriptions, sometimes you don't, because it's all based on your mood. It's all based on your feeling, your emotion. So I like to do my journaling in a very linear way, as in every single day I do my pre-trade thought process, my exact entry trigger or entry signal, and then I have my patterns execution, which strategy did I use. It could be flag, could be an R, whatsoever. Then I have my trade management, and I have my exit post-trade thought process. Why did I close this trade? What happened after I closed this trade 1 to 2 days later? So from a chart standpoint, I capture daily, 4 hour, 1 hour, 30 minute. All of them are consistent. So that's it for the journal review, and I'll talk to you there. Bye-bye.